Welcome to TheoTrade. This is Don Kaufman. You are joining me here today on Leap Day. That is February 29th, 2016. Let's take a little bit of a look into some of the trade action we saw today, which was an intraday reversal inside of the S&P futures. And that's where I kind of want to kick it off here. But we're also going to look at what I would call the lack of commitment in trade. And I'll explain a little bit about what that means as we go on over here and a couple of setups as the week progresses. First and foremost, this is the S&P futures, and I've taken this all the way down to like just 1 minute candles. I know I'm the extreme, but I wanted to show you in overnight trade, okay, how much the market is searching for catalysts. Okay, and I've mentioned this a lot last week. I mentioned it in, the weekend edition here of TheoTrade. But when I say the market's searching for catalysts, it is feeding on anything it can get its little paws on. And in the overnight trade, this is like 3 o'clock in the morning my time. You see the S&Ps exploding to the upside. It was news out of China. Okay, it's like another version. It's quantitative easing. Like if there wasn't enough quantitative easing in 2008, 9, 10, 11, 12, 13, 14, 15. But now we have quantitative easing version China 2016. Don't you worry. The Fed taught the entire world to get crazy with money. Anyway, China came out with a news announcement middle of the evening. S&Ps took off to the upside. It's pretty amazing, though, how much they're hunting for, news out there. This is like 5,000 contracts that traded in the middle of the night. I mean, you imagine some monkey sitting at a computer in the middle of the night just watching, markets, which major trading firms have that. The minute before it trades 167 contracts, the next minute they trade 5,000. Okay, I mean, that individual, they're never going to be the same ever again. So that's the overnight trade. Things progress, rally to the upside. By the way, the irony of this, even though the U.S. futures ripped to the upside, the irony of that was China's market still dipped. So they seem to not be able to get out of the way. Nevertheless, markets rally, and about midday we kind of topped out here just north of the 1950 handle. Now there's a lot of levels, okay, in play over here. And one of the levels we talked about that was just a key inflection point, kind of like a go, no go for the S&Ps, was 1934. We're under it right now. But the evening is young. Okay, we're at 1931 and change. We faded pretty hard as the day progressed over here. What sector really kind of took us down? Got to go to the XLF. But this is what I'm talking about in lack of commitment in trade. So the XLF on a percentage basis was, who's the big loser on the day? The financials are the big loser. That train is never late lately. So I'll zoom out for a second and give an idea what it means to me of lack of commitment of trade. And I saw a lot of this last week, and it seems to be continuing. Okay, in previous weeks, even when we were flatlining here in the XLF, okay, when I say flatlining, we're not doing that much. We still had, a lot of days of doing 80 million shares a day, 70 million shares a day. Okay, today, what do? 60 million shares? I mean, come on, I could trade that much. But again, lack of commitment of trade doesn't only denote the financials, and it doesn't just denote like volume on a particular stock over there. What also matters substantially to me is look at the options volume out there. It's not there. I mean, the sizzle index is at 0.29. That means it only traded 30% of the options that it has compared to the previous 5 days. So, I mean, this doesn't seem like headline kind of stuff, but I am telling you, you have to look beneath the surface of markets to get a real good feel of what's going on. So what this leads me to believe, and by the way, I looked through all kinds of different products out there, before kind of starting, recording this, and I saw this everywhere. Even the SPX, the granddaddy of all the products out there, only trading 70% of normal. That's when you're like tapping the screen, dunk, 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 dunk. Is this thing on? Does anybody even care? I mean, here's Google. Google actually saw trade action today. And when I say it saw trade action, like Google was down over 1%. It did basically 60% of its normal daily option volume. Again, you can go through underlying to underlying to underlying. Here's EEM. It was up on the day. Yay, EEM. You actually had a good day. But under option statistics, what do you got? You got nothing. All right. A light trading day out there, lack of commitment of trade, which still tells you, okay, the S&Ps are broadly undecided. They are searching for a catalyst. It explains why in the overnight trade, all right, somebody like sneezes literally, and markets can move. All right, not literally, but figuratively, markets are moving off pretty much anything there. The lack of that commitment, though, of trade makes us that much more, okay, capable of making a move on just a hairpin, and that becomes dangerous, okay? Very, very dangerous. Now, I'm going to back up for just a moment because I think there's one very important point that I picked up on over here. Now, I'm going to go over to the bonds. So if you're in to patterns, okay, and pattern recognition, there is a very key pattern that is being formed on the bonds. Now, I'm not a huge market technician myself, but I play one on TV. No, not a huge market technician, but I've been around enough market technicians to know that this is just a massive triangle in here, okay, and that is actually a bearish formation. It's a bearish continuation pattern would have a target, okay, right in about this zone. Now, what's interesting about that is, again, whether you believe that or not, neither here nor there. I'm just telling you, this is like the marquee pattern, okay? However, I've actually been, all right, on a research team in previous years, and we've looked into patterns like this and found the probability of it actually hitting the target zone, didn't actually follow through. There wasn't any statistical significance to this particular pattern, all right? The interesting thing, though, is that if you looked at a product like the XLF, okay, the exact opposing pattern, which is what you would expect, the XLF is opposing what ultimately the bonds are doing out there. So if you're into this pattern, okay, I think the way to look at it, and if you like this stuff, okay, the way to look at it is there's even pattern recognition technology inside of thinkorswim over here. You can go over here to like show patterns. It's going to bring it up as well. So again, if you've never seen it, this is a pattern and it gives you a projection window. All right, so it's actually giving you a projection window to the downside. You can look at other products like the XLF. All right, it's also going to give you, ultimately a couple of patterns over there and some follow through. Obviously, the XLF is actually showing a pattern exact opposing the bonds, and of course that's going to make a degree of sense over there. Again, I wanted to show it because it's so incredibly transparent that I think a lot of people are going to pick up on that pattern over there. The irony is to see if there's actually follow through to this. So it is, the massive triangle, which happens to be a bearish pattern to the bonds, that very well could fuel S&Ps a little bit higher. However, not so fast. Last week, I actually discussed a scenario where we could, in fact, see the bonds down and the S&Ps down at the exact same time. And it's something, again, you have to think of, you have to really consider in the days to come over here. So from here on out, okay, the things that I'm really looking at right now is what sectors, okay, are showing strength, what sectors are showing weakness. Markets, again, there's not a lot of commitment to the trade out there, as I keep mentioning. But one thing that I've kind of picked up on over here is there is some deviation from sector to sector. And in this case, I'll start off with the Qs. So inside of the Nasdaq 100, okay, that rally progressed, and exploded to the upside, but we're 2 weeks, okay, 2 weeks outside of the explosive rally. From 2 weeks ago, all last week, where do we actually end up? Exactly where we were. The Nasdaq has not and is not having follow through to the rally. Now, you can look at this in the Nasdaq futures, which, yeah, of course, they're moving right now. All right. You can look at this in the Nasdaq futures. Okay. Compare it a little bit to the S&Ps. So there's this broader chart that I've shown over the last few weeks and the last few months, and that was a convergence that was underway. And that is, we have expectations that the Nasdaq is going to sell off versus the S&P and versus the Russell, as the Nasdaq has been the top performer over many years. That convergence is very transparent in recent trade. So again, here's the S&P, okay, which is actually having a degree of follow through to the rally, not just 2 weeks ago. And then the Russell, okay, the Russell, the little engine that kind of could over here, the Russell has actually had literally 2 weeks, okay, of action specifically to the upside. Today happened to be the first day of hesitation. Why do I point the three major indices out? I think the Russell is the most key factor in here. If it rolls, better believe that Nasdaq is going along with it, because the Russell has been the strongest product out of the gate. Okay, when I say strongest product out of the gate on a percentage basis, inside the last 2 weeks, this rally, the Russell's been the strongest. Today was the first day it actually faded a little bit. We want to see if there's going to be follow through on the Russell. If so, it's going to pull the Nasdaq down on a percentage basis hard and fast. I mean, I'm talking Nasdaq 4,000 kind of range. Look for weakness in the Russell, okay, throughout the rest of this week. Weakness in the Russell signal, okay, for the broader markets to actually take it down a couple of notches over here. Again, this is a product that has not faded at all, okay, since the big in-your-face rally kind of progressed over here. With that, thanks a lot, everybody, for joining us here on Leap Day 2016. I'm Don Kaufman. Be back on chat tomorrow morning. Bye-bye.